Are you paying close enough attention to what's going on in Japan? That's the question of the day in the Real Vision Daily Briefing. We are sending to you live Wednesday, the 18th of January, on the back of turbulence in Japanese markets after the meeting in Bank of Japan earlier this morning, US time. And therefore, I've invited my colleagues with boots on the ground in Tokyo, Weston Nakamura. It's good to see you, Weston. Let's talk Japan.
Good to see you too. I'm not wearing boots, I'm wearing sandals, but yeah.
We've got sandals on the ground in Tokyo,
Sandals
at least, right? But Weston, a crazy day in Japanese central bank history. A lot of speculation ahead of this meeting whether Kuroda would decide to pull the rug from under this yield curve control program that he's been a part of designing. So please elaborate a bit on what happened this morning, US time.
Nothing happened. And I'm serious about that. I guess this is the only kind of, major central bank that can shock markets with a no change. But basically, we have more or less of a no change in terms of what markets were looking for and what they were shocked by. So just to recall, the last time, you and I were together was the December monetary policy meeting, which was less than a month ago. So these two are actually pretty close together. It's less than a month ago. So just a handful of trading days because we have a holiday in between. And in that last one, the Bank of Japan shocked markets by making a unexpected change in yield curve control band of capping 10-year yields at 25 basis points to now 50 basis points. And so that, caught a lot of people off guard, caught markets off guard, and certainly, had a global cross-asset impact. This time they shocked markets by doing nothing, because the last time that was kind of seen as opening a Pandora's box as to this will now be the start of the end of Bank of Japan's radical monetary policy on steroids experimentation, and therefore that's the end. This is the last, first in, last out of the major central banks who are providing like this, QQE, yield curve control, extremely low rates, accommodative policy. This is the last of them, and so we are in a new regime, a global regime of like no more free money and perhaps, market price discovery. I don't know, whatever that was, right? So that was kind of a lot of the, not just speculation, but the actual positioning and kind of market movement that we saw in between those times, that then and now. And when they didn't do anything, you got basically half the market caught off guard. Even though 40 of the economists surveyed on Bloomberg this time, they remained as a no policy change, and they were right this time, except for Citigroup, who said that they were going to ditch yield curve control altogether. But yeah, that's basically what happened.
Weston, if we look at the market action ahead of this meeting and after the meeting, it's pretty clear that the average market participant did not agree with this economist consensus ahead of the meeting. We had attempts to trade the 10-year JGB yield above this 50 basis points cap. We had material price action in the Japanese yen versus the US dollar ahead of it. And now it seems like calm is restored. Or is it? What's your take on?
Calm is relative, right? Yeah, calm. You could call it calm restored, but for how long, right? This is calm got kicked down the road, if you will. All right, so why don't we do this? So why don't we talk about what happened in between the last time you and I spoke, Bank of China and current. So the last time I was on there on the daily briefing, what I was saying was that the reason that the Bank of Japan suddenly increased the cap on JGB yields from 25 basis points to 50 basis points after a year of just going through a bloody battle, like bare knuckle fist fight with markets, and being very steadfast and not moving that 25 basis point cap, even at the expense of the currency, the yen, just melting down 33% at its lowest, the worst performing major currency against the dollar, year to date for 2022. Despite all of that, despite the political pressure he was getting, Governor Crow was getting, and all of that kind of stuff, they wouldn't budge. And then suddenly in December they did. And so why did they do that? And so the sort of broader consensus narrative at the time was Japan is finally experiencing, realizing, and therefore reacting to inflation. Japan's been stuck in the deflationary spiral for 3 decades or whatever it was. Finally, you're getting 3%, 3.5%, and probably tomorrow we might see a 4 handle on CPI in Japan. And so therefore they cannot continue to be this weird outlier major central bank that is not only not hiking but is actively easing policy and suppressing the long end of the yield curve and doing unlimited buying of the sovereign rate market. That needs to stop. They need to get in line, and it's about time. And so against all that, basically the bench panel is battling that. Then they lifted they got into a fight with markets throughout, mostly in June. And widows were made because they were policy unchanged. Then in December, they lifted, but they lifted not because of inflation. They lifted because of deteriorating financial market conditions or functionality or dysfunction, if you will. You have like very, very strange things happening in the JGB yield curve, for example. And so, Brian, if you actually put up this first chart of the Japan yield curve from before the December meeting and then before this current meeting. So if you take a look at this, you'll basically see that in December, that yellow line, that yield curve in both of them, actually, you see this very weird kink in this kind of where in the 10-year tenor, and that's because and that's where a situation where you have 8-year and 9-year JGB yields not only yielding higher than the 10-year, but they're yielding higher than the 25 basis point at the time yield curve control cap. And so there were issues with that. There were issues with like liquidity or illiquidity. There were many days where 0 trades were made. You have distortions in futures markets. You have very wide bid-ask spreads in the cash markets. You just have a whole host of issues that kind of then spilled out into like credit markets and credit issuance and pricing of bonds and so on and so forth, mortgage issues, issues within banks, amongst banks, and so on and so forth. So they needed to do something, and these sort of kind of conditions were deteriorating very rapidly, and that's what changed. And this is what they cite. This is not like my speculation. This is what they cite, and you could not believe them or whatever, but that's from that lens, it makes complete sense for them to act because of that, rather than like a slow uptick in CPI that is still half that of the developed market, the developed world's peers. So they increased yield curve control band in order to kind of stem this and calm things down. So what happened in between then? Did it work? It did not. It backfired. You'll see in that chart that basically this distorted yield curve is even worse than it was before, just 20 days ago or whatever. Brian, if you go to the next chart, this worsened liquidity, you'll see that like bid-ask spreads, average bid-ask spreads on JGBs have just only gone upwards, or only gotten wider, right? So you're just getting even worse trading liquidity, and then in addition to that, so not only is that not working, but it awakened this giant of I guess soon to be widowmakers or widows, but you got a ton of a record amount of short selling and just like attacking the bond market to the point where Andreas, you were just talking about like having yields right above the yield curve control band. So I don't know if you have that chart, Andreas, of like the kind of generic. Yeah. So if we could put that up there as well. Yield curve control is supposed to be a impenetrable wall of buying or a cap on yields. The Bank of Japan is going to, when yields get to a certain level, they will step in and they will offer to bid for an unlimited amount of JGBs, such that the cap on yield is capped. The market can throw whatever quantity they want at it, and the figure of unlimited should be larger than whatever that quantity is, regardless of what it is. And unlimited because of an unlimited printing press. Yet you still see the yield curve control cap broken. How is that possible? And so that right there, when that's going on, there's a few things happening. But first of all, during that time frame, you're seeing a ton of record amount of JGB buying by the central bank. Okay, to the point where I tweeted about this last Thursday. Essentially, I tweeted that the Bank of Japan essentially bought about 4.6 trillion yen worth of JGBs. That was an amount that was equivalent to about half of the 1 month that they had planned for in the December meeting. And that December meeting, they increased their monthly JGB buying schedule, and so they did half of a month within 1 day of buying. That was a record day until the next day, last Friday, where they beat that single day record with 5 trillion. So essentially, in 2 days, they exceeded the amount of JGB buying that they were supposed to do for the entire month, which was already increased. And so then on this Monday, this week, they increased the amount again. And so over the last 4 days, they bought somewhere around, I think it's like 13 trillion yen worth of JGBs. And so if you kind of annualize that, it basically works out to about 100, current exchange rates is about like 100 billion per month. Keep in mind, the Fed at the peak of their QE was doing 120 billion per month. This is what they're doing in that same time frame, but with like a quarter of the size of the economy. So they're buying in an insane amount of JGBs over the last several days, and you're seeing like this daily bond buying jumping to records. And this is all leading into this very meeting, and this you've never seen like a battle against the BoJ under attack like this before, and this is all coming from the fact that they just increased that band from 25 basis points to 50 basis points from that last meeting. So did that remedy work? No, that remedy was not a remedy. That remedy was poison, essentially. And so that was the background of what we came into.
Weston, let's look at what Kuroda actually said overnight. Because as far as I can read, it was essentially a full stop. And he wanted to communicate a full stop against this speculation. He wanted to communicate that shorting JGBs was like peeing against the wind, literally speaking, right? Do you think he will succeed with that communication? Because it felt like the market was sort of chasing the Bank of Japan into this meeting. But what's next now?
Succeed with
the full stop.
Define success. Yeah. So look, I think that in the context of all of this stuff, this is what Governor Kuroda does. He succeeds. Like, if you want to take about a meeting to meeting basis, and even leading up to, I think that he succeeded in terms of was able to control the yield curve, as in they didn't have a Reserve Bank of Australia situation where the RBA was basically dabbling with yield curve control, for like a year and a half until the front end blew up in their face, and then they gave up on it and pretended that was all the plan all along. So because it's not that, I guess it was success, but I just kind of want to explain how like this, how it's possible for a yield to be yielding above a so-called impenetrable cap, and so then you could tell me whether you think that's success or not. But the reason that happens is because the Bank of Japan owns more than half of the JGBs outstanding, and then issue by issue, like issuance by issuance, sometimes they'll own 80 or 90 or even sometimes the entire float of a particular issue. So if the Bank Japan is targeting if they're going to have a fixed rate operation in which they're offering to buy an unlimited amount of JGBs, what they'll do is they'll say, okay, so we're going to hold the fixed rate operation. We're bidding for an unlimited amount of JGBs at 50 basis points, and we're targeting JGB issue number 367, number 368, and 369, or whatever it is. Okay, and if they happen to own all of those, then well, that's kind of a weird situation itself. But what you can do is you can actually borrow. They lend out JGBs, but you can't borrow that and then short sell it back to to the Bank Japan via these sort of fixed rate operations. But what you can do instead is you can borrow from the Bank of Japan and you can sell it to the broker's broker market, or the BB market. And that's basically like the secondary sort of private sector market X the BoJ. And so you could actually get like an execution that will print that 57 basis points for something that's above. And the reason that somebody would sell or short, or the reason that someone would sell a bond below the floor, below, like at a price level that's below the guaranteed central bank floor, is because they presumably believe that that's no longer going to be the floor in the near future. So anytime you see, prints of yields that are above the yield curve control cap, you can assume that that's short selling, because that's the only reason that somebody would execute that, because they believe that the yield curve control band is going to be moved to 100 basis points, and that would be a very nice return. So that whole week where you're seeing kind of this record amount of JGB buying, and the yield still kind of trading above there, that's basically kind of shorts that are that you're seeing in the markets. And then Brian, if you actually look at the I think it is the last chart, the fifth chart. This is the last chart I want to show you, Andreas. This is 10-year JGB futures. JGB futures, by the way, are massive notional size contracts. These are 100 million yen per contract notional. Now that kind of circled area, first of all, under that the letter E in futures, and on top there, that huge kind of candlestick down, that was the last time you and I spoke. That was the BoJ shock, lifting of the yield curve control band. The circled oval area that you see kind of recently, that was the last few days in which you're seeing just a massive amount of JGB futures selling, shorting on volume. And then you'll see what the price did today when they didn't do anything with yield curve control in terms of moving the band. That got short squeezed. Anybody who shorted from there, and you can see right there, anybody who shorted there is losing money and or just getting completely, their face torn off and being out of business essentially. So that's like another huge. So you have shorting in the shorting and short covering going on in the cash market. Due to that above 50 basis point print, as well as these massive futures contracts that are happening. And so that's what happened today. So I don't know, Andreas, you tell me. I mean, it looks like a war to me, but you tell me who won.
Well, I guess this was part of the plan today, right? He wanted to send a signal to those trying to short the JGB market into this meeting. And at least for now, if you ask me, it will be very tricky to short JGBs ahead of the next meeting. It's not a free option to short them. You pay a negative carry to do so. So the release valve is probably the Japanese yen. And the interesting thing today is that we saw a spike in dollar versus Japanese yen of right about 3% right after the meeting. And then it started retracing lower again as soon as the market digested the news. And to me, the next question is now, who's going to replace Kuroda? And is the next governor willing to do something about the yield curve control cap? And Weston, I mean, I've seen Reuters and other international media outlets speculating in an announcement date, the 10th of February, for the next governor. But we still don't know the answer to that question. Who's next in line? Do you have an idea of who's being considered for the role, and whether it is a possibility that the next governor could look at the yield curve control program and decide to scrap it?
Yeah, that's a very good question. So I also have that. Also, the February 10th is sort of that date that's being thrown out there. So the timeline I have here is, let's see, let me pull it up here. Yeah, February 10th. And then you basically they're looking at nominee hearings. So the lower house and the upper house, which is basically like the House of Representatives and the Senate, have to do hearings. But there's obviously party majority, so it's going to go pretty quickly. But that's going to be February 16th and 17th. And then February 21st and 20th and 21st for the upper house and lower house, respectively. And it should be a fairly quick. Whoever the pick is from Prime Minister Kishida, as well as the deputy governors, should kind of move right along. So the front runner right now, there's three like main candidates, which is the current deputy governor Amamiya. He's the kind of policy architect. He's been there forever. But just because he's an architect doesn't mean he's a continuity guy, because he could also just un-architect things as well. But he's kind of the clear front runner in terms of, like, I don't know, surveyed economists who just they never get things wrong, right? So, and then you have the ex-deputy governor Nakaso, who is a he was ex-BoJ as well. I saw a recent interview with him. By the way, he speaks like perfect English and all that. He's a very international guy. And he was talking about, he just like, you could tell like he was being sincere, but he really hates the weak yen, but he's more terrified of the JGB market blowing up. So he's kind of like a more serious version of Kuroda. Not that it's very hard to be more serious than Kuroda, but. And then finally, the kind of, I guess like the really kind of underdog, but still nonetheless a real candidate, is this guy Yamaguchi, Hirohide Yamaguchi. Now, this guy was an ex-deputy governor under Shirakawa. This is Kuroda's predecessor. He would symbolize a shift away from Kurodanomics and kind of back to, well, maybe not back to, but away from the days of the current days of Abenomics, Kurodanomics. And so it's kind of a symbolic shift. The dangerous thing is that the Prime Minister Kishida's approval ratings are just in the toilet right now. They've been at record lows because of like a lot of scandals, a lot of resignations, not related to anything related to obviously monetary policy or anything like that. And he frankly has no kind of opinion or isn't saying anything about whose pick would be. There was a recent interview last week in the sort of public media broadcast, NHK, in which he was asked what kind of qualities he would look for in a central bank governor, and he literally said, "Somebody best suited for the job." Thanks, bro. Like that's real helpful. So, but here's what I'll tell you, Andres. It doesn't really matter who it is. So in the near term, you're going to get some sort of market volatility probably based on who it is. But in the broader scheme, or even like 3 months, 6 months on the job, whoever it is going to inherit the ghost of Kuroda. Governor Kuroda has instituted policies that are not that you can't undo them, right? Like if you bought 50 over half of the JGB market, and you're setting the price on the other half, which is illiquid, which has a very weird yield curve, that is that doesn't trade, that just, it's basically just kind of causing more problems than doing anything, in terms of guiding credit issuance and pricing and all that. And if you're in a situation like that, there is no such thing as a QT in Japan. Like you're not going to sell JGBs into a market that you've destroyed that doesn't exist, unless you want to have like 40% yields on, JGBs where they belong, for the most indebted country in the world. So unfortunately, they're kind of stuck here. And so I don't think that who it is really matters. And I don't think that whoever it is gets to even have any sort of flexibility in terms of what are my options? What can I do? That's just my opinion.
I think it's a very fair assessment. This is Italy on steroids when it comes to QE and QT. We've had a few attempts on at least communicating a upcoming sell-off in central bank holdings of European bonds, and we've never really succeeded with that here. And the issue is even bigger in Japan if they were to go down that road. But I wanted to share a chart of mine with you, Weston, on how I perceive the market pricing of this yield curve cap right now. It's obviously not easy to figure out exactly the expectations of market participants given the manipulated market. But what I've tried here is to assess the spread between swap rates and JGBs relative to history and relative to the amount of JPYs available to the financial system. And my take is currently, chart one, Brian, that in between 20 and 25 basis points are priced in immediately just from the spread between JGBs and swaps. Should they decide to just open the door for another hike of this yield cap. And ahead of this meeting, probably in between 40 and maybe even 45 basis points were priced in at the max. So expectations were built ahead of this, also in the swap curve and among market participants, of some kind of, if not removal of the yield curve control, then at least a fairly material hike to the 10-year point yield cap, which to me was always a complete nonsensical positioning, given that it is impossible to raise the 10-year bar to, say, 1% or 1.5%. It would destroy right about everything immediately. But the interesting thing here is, Weston, that this still allows us to speculate in the Japanese yen. And you and I have been talking about the dollar versus Japanese yen trade over and over in 2022. It was sort of the perfect spread trade between the Federal Reserve policy and the Bank of Japan QE program. And at least for now, the market is sort of free to speculate in a new regime once the new governor is put in place. And therefore, I still like this yen trade. I like to be long the Japanese yen just as a consequence of the speculation. But I don't know whether you share the sentiment around that trade, but it's obviously very important to assess what's going on in dollar versus yen as well.
Yeah, absolutely. So, I mean, I'm way more, kind of in and out of trades than you. So, but yeah, so I was long, I've been long the yen, and then I bought out of money calls on the yen into the December Bank of Japan meeting, which was phenomenal. And then going into this, I had basically a strangle where you're buying an out of money call and an out of money put on the yen, but the ratio was 2-to-1 puts, so therefore, yen downside going into this, because the way that I was looking at it was you saw basically a 10 handle move down, but like at least 5 of that last one was speculative, right? So if they were going to, and my view was that they were not going to change anything on yield curve control going into this, because changing yield curve control was what caused this entire mess in the first place. Why would they continue that again? And they need to reassert themselves in markets, and so there was going to be no change. And so that was kind of the bet that I had. But either way, my view was like, okay, if it's like most of this move in dollar yen is speculative, then if they do increase the yield curve control band yet again, then the market's going to have to reprice for that, and you're going to get like another 5 handle move down immediately. And if they don't, you're going to have to erase much of that kind of speculative positioning. And so that's what I did, and I kind of got out of. But I do agree with you that, being on the long side, over this period of what will be volatility as we, look at the next kind of potential governor, the nominee, the rumors, the headlines are going to be thrown out there that are going to be fake and then not fake, and so on and so forth. All of that, probably being net long yen, would probably be the side I would take too. Brian, on that note too, can you pull up that chart of yen versus gold? Did I ever send that to you? This is so the yen obviously matters a lot for a lot of assets, but this is just one very kind of simple one for people who think that none of this matters. If you're looking at gold and you're wondering why gold, or if you're like applauding gold's upside and all that, just make sure that you're looking at it against yen futures. They move tick for tick, even intraday today. And you can see the volume on gold futures and all that just really moves in tandem with yen. And I've been looking at this kind of correlation for a very long time. I'm trying to find more reasons other than the fact that just very simply, the dollar is the safe haven from everything, and then the safe haven from the dollar is yen and gold. and so therefore they kind of move in tandem. I don't know other than that, but that's just one sort of example of kind of yen correlation.
Weston, I want to conclude the show with another chart of mine on the relationship between the dollar-yen spot exchange rate and the amount of dollar bond holdings by Japanese accounts. The interesting thing is that when the Japanese yen strengthens, it is typically a hint of upcoming Japanese buying of US treasuries. So why is that? I wrote in December that if this yield curve control move from Bank of Japan pulled the rug from under the very long positioning in the US dollar versus the Japanese yen, then it would likely make life much easier for Bank of Japan, at least in FX terms, not in bond terms. A weakening US dollar basically allows Bank of Japan to build dollar reserves via selling Japanese yen, at least in theory, while the opposite was the case last year, while they were ultimately forced to intervene in the other direction, even though they reluctantly did so. And if the Bank of Japan is able to rebuild dollar reserves as a consequence of a trend change in the dollar versus the Japanese yen, then this may prove to be a self-fulfilling prophecy, right? With spillovers to US treasuries. First, we get a lower dollar yen reading. Then we get more FX reserves in US dollars in Japan. Then we get more treasury buying from the Bank of Japan, potentially. We get lower dollar interest rates as a consequence of that buying, ultimately pushing the dollar lower versus the Japanese yen, and then we have like a loop.
And then the private sector too.
Exactly. So let's conclude with that chart. Even though this is very far away from US shores, it actually matters for the treasury market what happened overnight in Japan. And Weston, no one's better than you at explaining Bank of Japan. It is a mystery to many in the West, but you did a great job of explaining what happened today. The final thing I wanted to ask you about, and we get tons of questions coming in on that exact question. When Bank of Japan is buying JGBs to the extent that they've done over the past 4 to 5 days, amidst inflation at, is it roughly 4% by now in Japan? I mean, do you fear that inflation will spiral out of control as a consequence of this cocktail of buying and already increasing price pressures?
No, I'll believe it when I see it. So people have to what people have to understand is that, and look, I'm coming from like American standpoint and background. It is inflation or deflation or prices just not changing or being impossible to increase prices on customers. It is so incredibly entrenched here. It's for 2 generations, right? Of people just not being able to or used to rushing out to buy something because something is going up in prices. People always kind of delay it. It's like embedded in culture. It's embedded in corporate culture. That's why I see like a PPI and CPI like massive gap. People are corporates are kind of also corporate culture is one such that they're fighting for market share and not really growth, and so therefore it's just like it's the analogy I always give is it's kind of like if you're driving around looking for gasoline to fill up your car, and there's a gas station and that's quoting whatever price down to like a quarter of a penny, and then across the street they have it like at like half a penny less. You're gonna go there. It's kind of the same thing with the Japan, like kind of just regular goods. Like if it's 10 yen less, then they're gonna go to that place, and then the 10 yen more place is basically they messed up, and they're not gonna get the business. It is extremely entrenched here. So I don't see that happening. I mean, look at the amount of the QE that Governor Kuroda's done, and the CPI that came of it. That CPI came because there's global CPI. It's not really a Japan thing. It's despite that. And then one more thing I just want to note too. Kind of not over right now because Kuroda is currently sitting on a plane on his way to Davos. And he booked that, and he made that like a point. He's going to be making some sort of speech on Friday or be on a panel or whatever in Davos on Friday. He did that, made that decision, or the Bank of Japan made that kind of announcement over the last 2 days or so before this meeting, and that would be around the time of when he decided what he's going to be doing for this meeting. So apparently he has something to say to the international foreign community as his last thing, to the financial elite, And remember, this guy is not really the most sane of all people, so he's gonna giggle, but he might say something as a goodbye message or something that he has nothing to lose. So it's not over yet. Pay attention to Governor Kuroda and his giggles, because it might be market moving.
So let's sum up this crazy day. Bank of Japan put a full stop at 50 basis points in the 10-year space on the Japanese yield curve. We should not expect them to move this needle anytime soon, if you're right, Weston. But the release valve is potentially the Japanese yen. And if the yen strengthens, it's potentially a buy signal for US Treasuries. So are you paying close enough attention to Japan out there? Probably not. And just by the look of it, US Treasuries moved 18 basis points in the 10-year space on the back of this Bank of Japan meeting. So watch Kuroda in Davos this week and watch Bank of Japan in coming months. It may matter for your portfolio. And we can guarantee you that we have, if not boots on the ground, then at least sandals on the ground in Tokyo throughout. Weston, a great pleasure. See you soon again. And thank you out there for watching the daily briefing. We'll be back again tomorrow, probably with a little bit less about Japan, but action is guaranteed in these macro markets.
Thanks a lot.
Overburden. Bank of Japan is doing the appropriate things.